Let us now move on to our final highlight for today. This time, we bring you the topic of an overview on global growth in Shariah ESG assets, Suku ESG, current trends and future outlook, sectoral in years to come. For these sessions that will be split into two parts, the topic of discussion for part one enables us to understand better on how the market reacted and what are the feedbacks from global investors on equity and bond. And this session will give us a better perspective on the global market data on equity AUM and smart money AUM, such as Sukuk funds related to ESG Sharia. For part two, the topic of discussion will focus on global market data on market performance and trends over the last several years. The speakers for these two sessions are here with us today, dialing in all the way from Dubai. Without further ado, I will now hand over the session to our next esteemed moderator once again, Encik Zakaria Osman, to lead these two sessions, beginning with speaker for part one and later on at 12:15 p.m. for speaker for part two. Over to you, Encik Zakaria.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. And a very good afternoon. Oh no, it's still morning. Okay, distinguished guests, ladies and gentlemen, we are now in the first part of panel session 3 to have an overview on global growth in Sharia ESG assets, including Sukuk, as well as the current and future trend based on sectoral and the outlook in years to come. Our distinguished speaker today is Mr. Bashar Al-Natur, the global head of Islamic Finance Fitch Ratings Limited in Dubai. He is responsible for coordinating all Islamic finance activities across Fitch's sovereign financial institutions, corporates, and other related teams to be a centralized and focused Islamic finance group. Graduated with an MSc in Banking and Finance from the Arab Academy for Finance and Banking Science. He is a certified bank auditor, certified risk professional and analyst, as well as the chartered market analyst. Welcome, Mr. Al-Natur. Distinguished guests, ladies and gentlemen. Global Sukuk issuance is expected to range to be about 130 billion in 2022, compared to 147.4 billion US dollars and 148.4 billion US dollars in 2021 and 2020, respectively. The slightly lower is mainly as a result of higher global oil prices and anticipated higher global interest rates. These concerns, coupled with the ongoing spread of COVID-19, current negative investment sentiment and the complexity of issuing and investing in Sukuk may negatively impact the market. However, the increase in environmental, social, and governance-linked Sukuk issuances and the emergence of new issuers will provide a bright spot for the global Sukuk market. As at end 2022, ESG Sukuk makes up 2.6% of the global outstanding Sukuk. So let me start by asking Mr. Natur his prediction on the outlook of the global Sukuk issuance for 2022. Would you expect an increment or sustained, or how do you say that? So maybe the mic is yours.
Assalamu alaikum warahmatullahi wabarakatuh. Thank you for having me. We're starting hot, I would say, directly diving into the topic. So I think the rest of 2022, which is just few months, we've seen already actually a pickup and some activities coming back to the Sukuk market. How is the whole year is gonna pan out? I think it's might be a little bit less than last year or at a similar level, depending on how that's gonna materialize towards the end of the year. But what I think is more important is how are we seeing the outlook for the coming year? I don't know if we should discuss that now or maybe leave that to later, but we'll definitely touch base on that. But what we saw some activity in the market, specifically in October, where we had a more quiet, I would say, Q3.
Yeah, and I believe we have a presentation to share with the audience in terms
Yes.
of
Yes.
the outlook.
Yes. So Kelly, can you kindly put the presentation on? Thank you.
Yes. Is this the slides?
Yes.
Yes.
Perfect. So I'll try to make this hopefully short and sweet. Can we move to the second slide, please? So very short agenda. So we'll start with the mapping of the Islamic finance rating landscape, which I think is going to give you a good glimpse on how we stand and where is the industry standing from a credit point of view. Then we'll look at the performance and of the Sukuk market, maybe touch upon the asset management market in the Islamic finance industry, and then talk directly about the ESG and the standardization in Islamic finance. Next slide, please. So with next slide, please. So the way that we look at the industry is as of Q3, we've actually rated around 164 Islamic instruments, which is Sukuk. This is coming from almost 64 SPVs. We have more than 38 Islamic financial institutions, which is the issuer, which is banks, the capital companies, or corporates. I think the map on the right-hand side shows you that this is across the globe. So we have Europe, Asia, Middle East, and Africa. What is interesting is that not only the number of Sukuk and the way that the Sukuk market has evolved, i.e., so instead of having just senior unsecured, you currently have subordinated, you currently have hybrid, you have short-term, you have long-term, you have ESG and what have you. So I think the actual width of the industry has also expanded, but I would say also in the last 12 months, we've added a new 4 jurisdictions to the Islamic banking rated universe. So we have added a bank in the UK, 2 banks in Iraq, and 1 bank in Nigeria, and 1 in Kazakhstan. And these are new jurisdictions where we rate Islamic banks, which shows that the industry is also expanding its footprint on the map. Next slide, please. So quickly, I don't think there is a surprise there. If we are looking at the Sukuk and the issuance of Sukuk, it continues to be around 58% coming from Supras and sovereigns in our rated universe, then followed by corporates and then financial institutions, structured finance. The biggest bulk of that is coming actually from the Middle East, and then you have Asia with around 25% and Europe with 6%. Next slide, please. The actual distribution of ratings, I think what's interesting to note is we have around 80%, 79% of the rated universe as an investment grade, and the remaining is speculative grade. And that is an interesting thing because in what we've noticed, and not only for the Sukuk market, but the appetite for investment grade compared to more speculative grade has been impacted during the increasing interest rate environment, where we found that the investment grade in terms of actually ability to go and issue has been a little bit better. But that said, in the Sukuk market, we saw also investment grade and non-investment grade coming to the market. In terms of the rating migrations and movement, I think it continues to be within the same range, even during the pandemic, it went a little bit down, but it's more or less around 80% investment grade and 20% speculative grade. Next slide, please. Here in this section, I'll just take you through the performance of the industry itself rather than the rated portfolio. And I think there you have two dynamics. You have the dynamics of oil exporting countries and the dynamics of oil importing countries. And I'm trying to put things in two big pockets. For the oil importers with the higher oil prices, the actual funding gap has increased and their need to tap into the market is expected to be higher. We saw, for example, this year on a sovereign side, we saw Indonesia, we saw Pakistan, and we saw Turkey coming actually 2 times to the Sukuk market. And that is something that I think worth highlighting in this. And here we are talking about the oil importers. If we look at the oil exporters, the actual new funding needs, almost with the high oil prices, is diminished. But what is really supporting the market is the push from many of these sovereigns to develop 2 things. First, the diversification of funding story of their own economies, and they want to have more interaction with the debt capital markets, including Sukuk. So we saw Saudi Arabia issuing regularly on monthly basis in their Saudi Riyal Sukuk issuances, and they came to the international market with a Sukuk and a bond. We saw Qatar introducing Islamic and Shariah compliant treasury bill, which is a short term from the central bank. We saw the UAE establishing and issuing under its Emirati dirham local currency bond. So far, maybe we'll see Sukuk further. So, despite the higher oil prices, the actual push to develop the debt capital market in these countries is supportive of the future growth of Sukuk and bonds in the coming years. So this is on the issuer side, and this is on the sovereign. If I zoom in and look at the other sectors, so next slide, please. If I look at the corporates, if I look at the financial institution, I think the story there is a bit more towards diversification of funding. So many of the banks in the GCC are relying on deposits for their funding rather than in the debt capital market. But due to various reasons, whether pushing and pursuing strategies to diversify their funding or because of higher growth, like Saudi Arabia, we expect that these institutions will tap into the bond and Sukuk market, thus also supporting the actual growth of that market. This is interesting because at the end of the day, you are looking at a banking sector that's deposit funded, but still pursuing opportunities and pursuing more diversification of their funding. On the corporate side, again, corporates continues to be largely funded by banks and bank financing. But as banks become more selective in terms of their lending, as the push of developing capital markets in general in these countries is developing, we're seeing corporates also tapping into these markets and maybe issuing Sukuk. So in general, on the issuer side, you can see that there is an actual need for funding for various reasons. On the investor appetite, the international investor towards emerging debt appetite has been, of course, impacted with the higher interest rates, inflation, uncertainties, etc. But you have the Islamic investors, which is mainly Islamic banks, that have adequate liquidity, which they need to invest. So you have a pocket of investors that's dedicated to the Islamic finance industry because they can only buy Sukuk, and they are still on the demand side, i.e. they're requesting more Sukuk than what's actually there in the market. Next slide, please. This is I will be very quick on this. This is on the asset management side. The 2 biggest market when it comes to the Islamic finance AUMs and asset managers is actually Malaysia and Saudi Arabia. No surprise there. Malaysia has a more diversified funding mix, i.e. sukuk, money markets, etc. Saudi Arabia is more on the money market side, but it's all developing in general in many of these markets, and sukuk is playing a big role in that. Next slide, please. Let me zoom in into the ESG, and I think this is an interesting, which is, I think, the focus of what we're trying to talk about here. Next slide, please. So if we are looking at the ESG story, I think there is definitely something to note when you're talking about Islamic finance. And I like to simplify that into 3 dimensions. So the first dimension is the negative filtering. What do I mean by that? Islamic finance has embedded in it negative filtering for alcohol, tobacco, pornography, gambling, and other harmful, from a Sharia point of view, activities that are in line with many of the sustainable agendas. So if you are looking at a conventional international investor in Europe or in the US that is interested in sustainable or ethical or responsible financing, you will have a slide there that is crossing alcohol, crossing tobacco, crossing pornography, crossing many of the things that are already embedded in Islamic finance. And for me here, usually if I'm sitting in that panel, I will not put a slide on Islamic finance on this negative filtering. I will just tell them, okay, can we go back to that slide and look at it? And I say, this is already built in Islamic finance. So this is an advantage. So when you are looking at negative filtering, Islamic finance has in it already that side. Can we go to the next slide, please? If you're looking at the actual impact, i.e. where is the money invested, green, sustainable, blue, or what have you, the Islamic finance industry has no advantage. They have to go the extra mile to make sure that what they are financing and funding achieves the requirement for that impact. And I think here the disadvantage is because in many of the Islamic finance countries, or in many countries where Islamic finance is active, the actual story of the sustainability and ESG is still developing at an early stage. So you don't have a lot of projects yet in these countries that have clear sustainability objectives. And that is something on the bond and the sukuk market. So it's something related to the country. So I like to look at the impact as neutral. The industry, the Islamic finance industry, or the issuing side on the Islamic side needs to do the same as a conventional one. The third dimension is actually structure. And here I think that has a bearing on the industry, because you need to go the extra mile. So even if you're achieving the first 2, i.e. negative filtering and impact, you have to have a third dimension, which is structure. So Sharia has to be done in a certain way. So even if you're not trading with alcohol and you are financing a green project, that does not make you an Islamic finance. It has to be structured in a way that is complying with Sharia. And this is where you need to go the extra mile for that. So how did that actually impact the market? Next slide, please. And I think this is interesting. If you look at the way that the sukuk market and the ESG related or sustainable related issuances, it has actually been growing in the past 5 years almost with no exceptions. Even during COVID and that period, we've seen the sukuk market also, ESG related sukuk market growing. And it's growing in various sectors. Of course, Malaysia is one of the leading issuers in the responsible financing side, but the caveat for that, it's mostly in local currency. It's in Malaysian ringgit. The activity in the US dollar and that side of the equation is more in other countries. Actually, the ESG related, responsible related sukuk that we rate is now account for more than 10% of our rated portfolio, which is, if you recall, as I said, it's around 130 billion outstanding US dollars as of Q3. So it's becoming a significant part of also the rated universe in the hard currency, where we actually rate a significant part. And that is expected to continue. And I think we'll see that trend continuing. Next slide, please. So to go back to the question is, do you go in Islamic finance countries through the path of sukuk or bonds? I think the table here clearly shows you what has been chosen in the past as of Q3. So almost 100% of issuances coming from Bahrain in an ESG format came in a sukuk format, not in a bond. 90% coming out of Saudi Arabia is in a sukuk format, not in a bond. Indonesia has a similar story, but at a lower level. Malaysia, similar story. In the GCC countries, it's around 73% coming in a sukuk format, not in a bond format. So that's an interesting indicator. So when you see an ESG issuance, you would see a preferred choice towards a sukuk rather than a bond. The key reason behind that is the issuer does not want to lose the Islamic investors, and they want to add another layer to the pool, which is the ESG sensitive investor. And this is where we see many of these transactions panning out. Okay, let me have the Islamic investors, and on top of that, let me attract the international ESG sensitive investors. So this has driven also the sukuk market and the growth of the ESG, and we expect the preferred choice of issuance in countries where you have active Islamic finance markets, i.e. the top 10 countries, to continue to be on top of the sukuk rather than more. Next slide, please. I will not go quick. I'm not going to go through into details, but there has been varying developments on the way that the ESG regulations have evolved in OIC countries, 57 of them. Some are developing at a faster pace, some at a slower pace, depending on where you pan out. But at the end of the day, we are seeing actually movement, more interest, even with what's happening in Egypt now and conferences. There is more and more awareness, and that's a key limitation to the industry that has been established. There is more of a push of many of these governments putting strategies and milestones that they want to achieve. That will all create a funding gap, and we expect that funding gap to be partially financed by Islamic finance syndications or loans or sukuk. And I think this is another push for the growth of the industry over the medium to long term. Next slide, please. Challenges, that's a very important fact, because at the end of the day, you need to bridge that to be able to do that. So as I said, how is it evolving in each country? Lack of standardization in the ESG, and on top of that, you have the lack of standardization in the Islamic finance industry, higher reputation and legal risk, definitely there, complexity, unavailability of project, pricing and advantage, human capital limitation in terms of qualified people that really understand these topics and take them and push them through. All of these are challenges that the industry is facing, not only on the Islamic finance side, but on the conventional side in countries where Islamic finance is active. Next slide, please. From a credit point of view, so far, the sukuk that we've rated, and here again, I'm focusing on a credit point of view, did not have an additional implication on the sukuk rating. For sukuk, we have a specific criteria on how we rate sukuk, which is a specific dedicated criteria of rating asset-based sukuk, i.e. obligor-backed one. But we did not see so far bigger implications or specific implications on the sukuk side. Next slide, please. On the Islamic bank side, we actually differentiate Islamic banks to conventional when it comes to ESG credit relevant score. And I think here maybe let me pause a little bit. So most of our ratings, whether sovereigns, financial institutions, or bank, and here I'm talking about credit ratings, they will have an ESG relevant score. What does that mean? That means is how much the ESG relevant elements have an impact on the credit side of the story of that issuers. And in the case of Islamic banks, we've differentiated Islamic banks into two areas: governance, because of the additional layer of Sharia governance, the structuring of products, the reviewing of products, the audit, and also on social impact, where you can actually score higher as an Islamic bank, because as you know, for example, delinquency interest is not allowed in many banks. And even in these banks where it's allowed, it goes to charity. So at the end of the day, you have another layer there that could have credit implication, but it is definitely differentiating Islamic bank conventional. Next slide, please. Standardization, I will not spend a lot of time. So please, yes. Here, I think if you've been in the industry, whether in the past 20 years, or you've been in the industry for the past 1 year, you will have that issue in your mind. And I can see Zakaria nodding and smiling. It's not something new, but what I like is to put it in a framework. So the standardization has a local dimension, has a regional dimension, and international dimension. I have to say some countries have been very successful in standardizing their local story. Malaysia is a very good example, actually being the most evolved when it comes to that. Many other countries are doing many things there. So UAE implemented a UFI Sharia standard to standardize the industry that had, yes, maybe, and we'll see in the future if that's going to have a standardization impact, but it had another impact on the sukuk market and how the sukuk market performed, which caused, I would say, additional complexity. But let's see if it achieves the target in the longer term. There are institutions like the IFSB and IOFI that are trying to standardize the industry on a regional and international level, but that is something that is not really transforming or even harmonizing the industry. When we say standardization, for me to simplify it, it is on 5 dimensions: financial and accounting, Sharia, product and documentation, supervisory and regulatory framework, and law and dispute resolutions. So, to simplify, this is actually standardization. And with that, I end my presentation, and I'm all yours.
Okay, thank you, Mr. Natul. Okay, you mentioned about standardization. I think, as I mentioned earlier, I've been involved in Islamic finance for ages. When we first started, standardization has always been an issue. And I think what Malaysia, or to be exact, the regulators here, we are moving towards more, not so much of standardizing, but more towards harmonizing. And the beauty of this the structure here in Malaysia, we try to adapt, assuming that we are targeting the GCC market, will be compliant to the IOFI. If it's for the local market, then it's fine, kind of things. Okay, just based on the presentation, I think it's a very promising, and you can see that more and more countries are moving towards ESG sukuk issuances, kind of thing. So can I say that maybe in the next coming period of time, the ESG global issuance will be very much in terms of the will be the ESG sukuk will be the key issuance theme in core Islamic finance market? Because
I think that's what we've seen, and we have track record to prove that, and we expect that trend to continue. It might not be, so for example, in the GCC, it's around 70% of issuances. It might go down to 60 to 65, 55, but it is, as you can see, it is higher than bonds. So I would say we expect that trend to continue to go through the sukuk path as the preferred one, when it has a responsible financing tag over it.
Okay, I just like to narrow our discussion very much on Fitch, because we need to understand more on Fitch. Because based on the statistics, based on the reports published, they're saying that Fitch rates more than 80% of the hard currency ESG-linked sukuk market. So this actually equal to $13.58 billion, or 10.4% of all Fitch rated sukuk, because you have all the sukuk. And it's just that I'm maybe curious if you're able to share with us in terms of the sector that actually the major issuer of this ESG sukuk.
Okay, it's really very diverse. That's an interesting question that I also like to see. But the actual answer to it is very diverse. So we have SUPRAs, which is the development bank, like the Islamic Development Bank. We have utility companies issuing in Saudi Arabia. We have mall operators issuing in a sukuk format. We have airlines that is going through, like Etihad Airways transition sukuk. As you can see, there is a lot of sectors, because this is something that is, I would say, just starting. There is no big, strong label to it. What is really missing is we don't have a lot of sovereigns. Malaysia issued a green, a sustainable sukuk. Indonesia has been issuing that since 2018, but we might see more coming from sovereigns that are having these markets. but it will eventually trickle through to the Islamic banking industry, and this is something that we already started. So Islamic finance industry on its banking side is also now looking and trying to see and explore if they can go through that path. And in the corporate sectors, I don't think we will have a very big dominant sector having its big footprint on the sizable share of the industry when it comes to the corporate side of it.
So you would expect more from the corporate side, because currently I think it's more of the what you call it is government issuance kind of thing. So would you expect more from the corporate side?
Actually, it's more on. So it's when you say so, we have Malaysia as a sovereign, we have Supras issuing. What I am saying is, if you're looking at number of issuances, we would expect financial institutions and corporate to play a bigger role. Is it going to be the bigger sect of the ESG sukuk or not? That is yet to be seen. But what is expected is that we'll see more and more of financial institutions and corporate tapping into the market.
Okay.
Compared to what we have now.
I see. Okay. Another thing is just that apart from the ESG circle, because now I was talking about the SDG, ESG, and BBI and those kind of things. So apart from ESG circle, more Islamic syndications are deployed for ESG or green projects, like the Egyptian Finance Ministry's 2 billion syndicated sustainable term financing facility, and more and more Shariah compliant funds with ESG focus launched in 2021, including Saudi's Setco Capital. And there were also several walkout-based funds launched. So to wrap up this session in just some time, so how do you see the outlook of the Shariah compliant ESG? Not necessarily from the sukuk perspective, but from every financial services.
That by itself needs a session. I'll try actually to make it similar. I think in the past, I would say maybe 2 to 3 years, from my discussions with many of the leaders of the industry and CEOs of Islamic banks and Islamic institutions, there has been a realization that there can be more done in the Islamic banking industry, in the takaful industry, in the Islamic finance industry in general, to shed light on what the industry has already in it. So there is a lot of things that are built in the industry that would qualify for ethical financing, responsible financing, that is not really displayed properly. So that is one side. What is also the industry is realizing that they can actually, since they have, if you remember, the negative filtering side of things being ticked automatically for them, that they might have an advantage. And that advantage could actually give them a push to go and pursue the impact side of things, i.e. let's maybe try to target specific projects, target specific funding for projects that would qualify us. And with that, we will be able to attract a bigger investor base. So there is a realization in the industry. There is a lot of talk of saying, okay, how can we do that? And as you correctly said, syndications, financing, bilaterals from many countries, not all the last year, and even recently in the last few weeks, we've seen this is picking up. And I think that trend is going to continue. But I think what is really lacking is the actual awareness in these countries when it comes to sustainable finance. So at the end of the day, you have institutions that want to go and invest in impact, unless the sovereigns, i.e. the top-down, is having the right projects for you to fund, and they have the right frameworks and regulations to allow you to go and pursue these in a transparent way, which will create confidence at the end of the day and build awareness. I think we will continue to be growing in a limited, I would say, manner, but still growing. Once these, I would say, more fundamental issues being resolved, i.e. having the right projects, having the right frameworks, awareness, and creation of confidence at the end of the day, then this could actually pick up at a faster pace. So is the industry gonna do more to put its specific trademark on the global ESG side of things, the responsible side of things, or it will continue just focusing on, okay, we're Sharia compliant, we'll focus on that. I think that's a question that we will know the answer for it in the coming few years. But I can see a lot of leaders in the industry are realizing this, in the past few years, and they're trying to take actions of it. How fruitful and successful is that is something yet to be seen.
Okay. And do you see the enabling environment is also an issue in some countries?
Definitely. If you remember, the first limitation I said, it's a top-down. So the first thing is you need to have the actual regulatory framework that gives you the ability to have some standardization, some terminology harmonization, some basic principles to allow you to build on. And I think this is definitely lacking in many countries of the OIC. But there is also realization in many of these governments, they are pursuing agendas and strategies, and many of them are signatories to zero emission and zero strategies and climate change commitments. Let's see if these are going to materialize on the ground and change the way that things are by developing frameworks that can be easily adopted by the private sector, whether on the banking side or on the corporate side, and build awareness and the know-how and knowledge of the workers in these countries.
Okay, I think before we end the session, I've got a few questions here from the floor. One of the questions is, can you elaborate further on the sector that sees strong growth in ESG sukuk in the past 7 years? What are basically the sectors that actually gives?
I said, as I said, it's a diversified one. We've seen supras and sovereigns in terms of volumes playing a bigger part. And when it comes to sectors, we've seen utility, we've seen airlines, we've seen mall operators. So I would say it's a diversified story rather than one sector standing out very clearly.
Mm-hmm. Okay. And do you see that be sustained, or maybe new sector coming in as a
I think what
kind of thing?
I think we will see. So maybe let me put it in the first stage is we will see more on the sovereign side, pushing the agendas that will create a funding gap on the project side. So once you have these agendas pushed, that will create a funding gap. That funding gap will translate into the sectors that these governments are putting as a priority, whether into the oil and gas, whether into clean energy, whether into whatever sector, renewable energy, etc., etc. So at the end of the day, it will pan out to that at the end of the day. But the actual participants will be banks, will be corporates, and also governments. So as I said before, I think we might start seeing first more government coming into that sector, and then followed by financial institutions and corporates.
Okay, thank you very much. Okay, I think time is against us. On behalf of the organizing committee, I'd like to thank Mr. Bashar Natur for being able to be with us today to share very insightful presentations with all the numbers and things. So on that note, thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.
Assalamu wa rahmatullahi wa barakatuh. Thank you for having me.